Hi there, welcome to Grain TV. It's Tuesday, July 19th, and we had double-digit losses in the grain market today. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, beans losing hard to the downside, giving up 30 cents on front month August and 35 on new crop November, while corn was off 13 and wheat continuing to be the dog, losing 10 cents a bushel. The news today was pretty limited. We continue to watch the latest weather forecast models. This morning's model was pretty disappointing if you were a bull because it reduced heat and raised precipitation forecasts for much of the Midwest. If we take a look at this next chart, we will see the model the model temperature forecast for the next 9 days for the Midwest, and basically you'll see the latest model in blue, the model run from 24 hours ago in red, and you can see the blue line coming in cooler than the red line, so suggesting that the temperature forecasts are going down as the model runs more frequently here, and also precipitation forecasts increase in this latest model run. So obviously for beans, they took it hard on this news, as well as news after the close on Monday that showed crop conditions for both corn and beans holding steady at very, very lofty levels. In the case of corn, we're standing at 76% good to excellent. In the case of soybeans, 71% good to excellent. Both very good readings for those crops. And in particular, let's take a look at how those ratings stack up versus record yield years. And we don't have to go too far back to look at years for record yields for corn and beans. And corn, the record yield that stands right now at the U.S. average is 2014, when we had a 171 bushel crop. Right now, USDA's got their supply and demand pegged at 168 bushel yield. That's without any sort of formal surveys on yield, so we'll have to wait until the August number. But right now, as we look at 76% good to excellent in 2016, that stacks up right in line with the 2014 year for this time of year when the crop was 76% good to excellent. So if you're a bear, you may have more fodder in your toolbox here to suggest that yields need to go higher in that supply and demand balance sheet. Also, in the case of soybeans, the record year was last year at 48 bushels to the acre. Right now, USDA a good one bushel below that, 1.3 bushels below that in their latest forecast. If we look at the good to excellent rating, we're not that far off from that last year rating of 72% good to excellent, this year at 71%. So there's still time left to change the soybean yield, but overall right now as we sit, without any sort of major weather forecast that looks to be sort of benign right now, it seems like it's going to be hard pressed to hold $10 beans as we get further along in this season. In the case of corn, we're flirting down here at very, very low levels. We've been chopping around the last few days, trading higher in some days and trading lower in today, and today we closed at the low end of the range. But if we look at this weekly chart from the GrainEdge trading platform, nearby corn weekly chart, we got to go all the way back to 2014 when we traded a low of 318. So keep in mind that may be our next benchmark here, as yields probably will continue to ratchet up as the weather looks pretty favorable. The crop is in very good condition, and so it seems likely that our balance sheet ending stocks are going to continue to grow, which will likely push prices down in the near term. So keep that in mind if you're a producer. We may not be out of the woods yet. We may still see lower prices to come. That's all we got for today on Grain TV. Tomorrow we'll be talking about ethanol numbers. As always, if you'd like to learn more how we can help you in your own grain marketing situation, visit us online at grainhedge.com. As a GrainEdge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.